Hello everyone and welcome to the Swing Trading Stock Market Outlook for the week of February 20th. Just a reminder that it is a Canadian and US holiday on February 19th, so the stock market's closed, so we'll resume trading on February 20th. If you're watching this video and ever wondering where this is, if you go to the website, it is under Stock Market Analysis and Trades under the Stocks category, and this article is updated each week. I go through the same process, just looking at overall market conditions and how aggressively I want to be deploying capital and in which direction. Currently, conditions are good, and we're going to look at why that is. I'm deploying capital on long trades. Some watch lists here you can go through. The best swing trading stocks list for February, just high momentum names, good for what I call the tater strategy. If you're wondering about that, you can click on this link here. It's also mentioned in that best swing trading stocks list. Current stock watch list is trades that are currently setting up. I've not been looking at as much just because it takes a little bit longer to scan. I've had a little bit less time lately. Rounded bottoms, contraction patterns, those sorts of things. I've been mainly looking at the tater strategies and then tater strategy setups, and then also earnings plays, which there are just a plethora and they've been doing really well. So focusing on those, the latest updated list is there, ones to watch. And then just some other lists you can check out too if you needed even more trade ideas, but those are enough for me. And so let's get to the indices. This is the first thing I like to look at, is just assortment of indices to see how we're doing overall. The NASDAQ 100 in a overall nice strong uptrend. You know, we've had a little bit more choppiness here, but overall it's still an uptrend. I can't argue with that. And same with the NYSE Composite. We've moved to new highs, an uptrend. The S&P 500 moved on the upside, had a little bit of a pullback there, but still an overall uptrend. The Russell 2000 was in this deeper pullback, but as you can see, we have started to recover out of it. We've pushed to new swing highs above this prior one here in late January. So we're pushing up, and we're still below that prior high from late 2023, but at least lately we've been making progress. So I would call this, we're moving up within a pullback within a longer term uptrend. So even that's fairly positive at the moment. The Canadian index, a little more mining and energy heavy companies. We had this sell off here, but then we bounced right back. So definitely it got choppy, kind of a sideways period here for most of the entire year so far, but we're still moving quite well, and we've moved back up to the highs. So I'd say this one's a little bit more choppy, not quite the nice uptrend or the up moves that we've had in the other indices, especially the NYSE Composite, up in 2024. For 2024, the Canadian market more sideways, but still we've moved up to the highs. Bitcoin still acting very strong. This is a weekly chart just so we can see kind of the whole uptrend that's been going on since 2023. And yeah, acting very nicely there as well. So uptrend there. Let's look at what I call the market health indicators. These help tell us what's going on underneath what we see on the indices. The S&P 500, this is an S&P 500 chart as we talked about. It's in current uptrend. This is a little bit interesting, and I've kind of flagged it. It's, we haven't really hit a red flag type scenario, but I'm just flagging that this divergence, as we've gone up, fewer stocks have stayed above their 50-day moving average. That's what this is telling us. The orangish red line is the S&P 500 stocks, and the turquoise line is all U.S. stocks. So what percentage of them are above their 50-day moving average? So of the S&P 500 stocks, 59% are above their 50-day moving average. 55% of all U.S. stocks are above their 50-day moving average. 50-day moving average, just a very crude measure of whether a stock's in an uptrend or not. It's not a great indicator, but it is lets us know kind of where we're at. And so we've been moving lower. So fewer and fewer stocks are holding above their 50-day moving average. And that's, just kind of says, hey, like, pay attention to that. We may have fewer stocks that are doing well. I'm typically only looking at trading the strongest stocks in the market. So everything I've been looking at has been holding up super well and moving very nicely. So I do view this with a bit of caution. If I start to notice fewer trade setups and things start to not working as much, this will become definitely more of an issue. But it's really once we start dropping below that 50 mark, especially with both of them, the S&P and all U.S. stocks, that I start to say, okay, I'm going to back off. And we're just kind of holding there, right? We haven't really dropped below it, so especially with the S&P, hasn't dropped below it. This is volume, not really important to me at the moment. This is ROC daily, which is rate of change daily. It's just the percentage daily movement of the S&P 500. And what we tend to notice is that during uptrends, it's lower volatility and that we don't get daily 2% drops or bigger. And we haven't had one in a very long time. Whereas if you go back to 2022, we had lots because we were in a bear market. So uptrending markets, the downside days are fairly minimal, and we're still seeing that. We had this one little bit bigger drop where everyone's calling for doom and gloom, and maybe that will develop, but at least not right now. We haven't seen any 2% downside days. When one of those 2% downside days occur, I usually hold off on trading for at least a couple days to see what happens. If we bounce right back, great. But usually it takes at least several days to kind of like level out. Maybe we sell off a little bit more and then start to go back up. I've found that if that 2% downside days occurs, almost nothing is lost by me taking a couple days off and not adding any new positions. NYSE advanced decline line, you can't see back here because I've just kind of zoomed in so we can see the far right of the chart here. It's definitely a smiley face because we are continuing to move up. Even this last week here, you can see we didn't quite make it to the high of, I think it might have been this is Friday, Thursday, Wednesday. So like the highs of early in the week. We didn't quite get back there, but you can see the NYSE advanced decline line did make a new high. So this high equates to this one, and this high equates to this one. So we've been moving up nicely. So this is actually kind of leading higher, and that's a good sign. It shows that underlying strength, at least by this indicator, is strong. This one, a little bit in conflict, I would say. This is up volume divided by total volume. So we're looking for extreme levels. So we look for either 10% upside volume or 80-90% upside volume. And that just means, so if you have 90% upside volume, that means 90% of the volume that occurred on that day occurred in stocks moving to the upside. If you have 10% upside volume, that means only 10% of the volume that occurred that day occurred in stocks moving to the upside. So we actually had 10% upside day on this kind of gap down day a few days ago. So that's typically a bearish signal. But then over the next 2 days, we had back-to-back 80% upside days, and back-to-back 80% upside days are considered a bullish signal. But I don't typically look at the bullish signals, when we're way up in the middle of a bull market. I look for the bullish signals near the lows. So to me, these just kind of offset. It will more depend on what the price action does over the next few days. So I'm kind of just ignoring this for now because it's not in a position I super pay attention to it anyway. And we haven't had a big sell-off day, and we're still holding above on the other one, on the stocks above their 50-day. So to me, as long as my watch list and the trades I'm in keep acting well, I'm going to keep deploying capital. Let's quickly look at, and the one last thing I like to look at is, as I just discussed, how are the setups and the watch list and stuff that I'm looking at. How are those stocks doing? Because that's kind of my trading world at the moment, or anytime, are my watch lists and what I'm actually in. Really, what's going on with the market? Like, yeah, it plays some effect, but if what I'm in is really working, hey, that's really what matters. So as long as that's good and it's kind of like I feel like I'm in the zone with what I'm doing, then, and it's working, then I'll keep running with it. So yeah, stocks are good that I've been looking at. So that's another positive indicator. So until things start to turn, I am staying long. In terms of sectors on the move, I would say technology, communication services, consumer cyclical, industrials, healthcare, financial. If you look at the last month, these are pretty much your top performers. Most of them in the top over the last 3 months. They had a little bit of got smacked a little bit last week. So, we saw some other sectors that hadn't been performing as well, like energy, take a bit of a leadership role over the last week, but that's a week's not a very long time. So I'm a little bit more focused on, it's kind of been stronger overall. So we'll see if technology continues to weaken, then, we're always, my watch lists are always kind of on the stocks that are strongest. So those are the ones that I'm going to focus on. And that's kind of the point of this sector analysis is if, you're really crunched for time for scanning or something, you could just focus on these really strong sectors. So what am I doing right now? Well, I'm, like I said, deploying capital on long swing trades. Usually I am day trading as well. I'm taking a little bit of a time off from that in the mornings just because life's a little hectic with kids and everything. So taking a bit of time off, schedules, getting some conflicts with my trading going on. So yeah, taking a bit of time off from that, but that's always an option too if you want to level out some of the swing trading is a very high activity. Then you might have a month or two where you don't really do anything if the market's just kind of choppy, and so you kind of have this activity and then nothing and then activity and then nothing. So day trading kind of fills that in where you can have this more, steady stream of income because you can trade each day and find multiple opportunities each day for day trading. So that is your stock market outlook for the week of February 20th. Have a great holiday.